A beautiful day to you. This is Ron Janish with andrewscourse.com. We're going to talk about keeping profits and a little technique that I use for that. Okay, here is the Russell Index. It's a recent chart. Today is April 5th, the year 2021. And this is where I got in this particular trade. These are daily bars. And if you remember the Andrews Babson group on Google Groups, you'll have gotten the email right around the time I got in. So we did that for a demonstration trade. It was real trade, real money. And let's take a look. Boom. This is what the data from that particular account looked like this morning. As you can see, we got in at 2100.65 in here, and that would be right about here. Okay, and that's a pretty good place to get in. Now, the problem with that is after price goes up, you start to realize, hey, there's going to be a pullback. Do I stay in? What do I do? And there's some real apprehension about that. And so we're going to talk about a way to deal with that. And so what happened was price went up and then price came down. And yeah, I felt fairly confident. Hey, no big deal. It does one of these little corrections for a couple of days, and that's fine. And so, and up we went up until Easter, Good Friday, and here this is what happened on Good Friday. And as it got up to this upper H line, I knew that probability was real high that there was going to be a downturn that was at least temporary. So what do, right? And so what happened was, let me show you. As it got up to that line, I put a short position on in the September contract, which is the next contract over. Now these are kind of tricky. They're fairly illiquid, so it's really important that if you're going to do this kind of stuff, that you use limit orders, right? Okay, so wound up doing that and wound up having a short position on. And as you can see today, well, price is down from the highs up here. And as a result, that $9,000 in profit that I had in the single position per position from down here went down about almost 20%. Yeah, the profit decreased 20%. This little move here is a 20% decrease in profits because $9,000 in profits went down almost $1,800. Okay, as this thing here went down. And so the way to protect it is to put on this September contract at the same time as a limit order. And this is what we have. This is what I've done. Okay. Now, this is one of the advantages of trading futures. Now, in stocks, you can do something like that with options, but that's a bit fancier than I'd like to get into. One of the other things that we have a position in right now is, as you may have noted, is I'm presently short in the gasoline, and so we'll let this guy here come down a little ways and then take profits. So this guy's a little more to go before we'll take profits, because here what I've done is I've taken a short-term system. Remember, we have a system where we had over like 1,000 trades in a year and a half or whatever it was, and we wound up taking a look at them on an intraday basis and said, hey, these are all great trades. We'll take them all and put them all in one box. And then we divided that box into four by saying, okay, well, if you look at it on a daily basis, one of these four things would be true. And so we found is that when we put them into 4 different groups, some of them were dismal, some of them were just crummy, and then some were better than others, and some were absolutely amazing. And about 300 or so, or maybe a little more, of that total massive number of trades intraday wound up being in the A group, A for absolutely amazing, and so wound up keeping those. And this is the position we have on right now of that absolutely amazing group. Now, this is not the same as what I showed in the recent video about Tom's pattern. Totally different deal. Okay. Matthew just called me this morning, told me he did a study in YM of Tom's patterns. I gave him the specific criteria to use in terms of when, because I don't like this 24-hour stuff. Just a certain time during the day that we're looking for trades, and it said, well, in the last 6 months or so, in YM, it's had about 15 trades, and so you extrapolate that out, and you say, well, if we're doing ES and YM, we can probably guess that there's probably going to be about total 50, 60, or 70 trades during a period of 1 year. And we're only really looking at ES and YM. We're going to be discussing Tom's pattern and all that good kind of stuff in detail. You already know it. Anybody who's taken our advanced course, for $3,875 knows what that pattern is. We've covered that in detail, and it's Tom's favorite pattern. So, and other thing I got to tell you that I'm really excited about is in September, the end of September, we're looking at having a live seminar. Why is this exciting to me? Well, first of all, it's going to be at the Marriott, which is just a short walk from where I live. And, there's a nice Marriott there. And so we're going to have it there. So I've got to make some reservations. And it's going to be a live seminar. We're going to limit it to 12 people. Now, why is that? Because it's easier for me. I don't want to make this ridiculously hard. So get 12 people who are really focused on the techniques in order to come to the seminar at no charge. You have to have taken the expanded course this calendar year, or there's a fee for it if you took the expanded course in the past. Okay. And if you've just taken the advanced course, there's a bigger fee for it, much bigger. So, make up your mind. If you want to come, let me know now, because we're limiting it to 12 people. Okay. Anyway, got to go. You have good time and good trading. Till next time, Ron Janish, AndrewsCourse.com, signing off.